Good morning, everyone, and welcome back to my YouTube channel. So, in today's video, we're going to talk about how to identify your high probability order blocks, your high probability POIs. In the previous video, we have learned to identify just your valid order blocks, all right? And in today's video, we're going to talk about how to identify your high probability uh, break of stock, high probability POI, and high probability order block. There's a big difference between a valid order block and a high probability order block, all right? So without any further doing, let's get started. So we have this diagram here. This is a structure. The market is bullish in this leg here, and later the market has become bearish here. All right. So after this break of structure, for example, the market pushed down to take out this inducement here and mitigate your extreme order block here. All right. So this is a valid structure. This is a valid order block. Let me mark. I will just mark randomly all the valid order blocks, and later I will teach you how to identify, how to choose the high probability now. All right. So this one here was our extreme order block. This one is our decisional order block in this leg. And down below here, we have another extreme order block here. All right, so here we have already marked all of our valid order blocks. All right, so this one here is our first valid extreme order block. Okay, and the second one here is another extreme order block here, and this one is our decisional order block because the market has taken out inducement here, and this is the first valid order block after the inducement is grabbed here. And this is extreme order block. Why? Because it is here at the same area as our last lower high here. So if the market drop and fail this extreme order block, then this will be a change of character. All right, so all of these are our valid order blocks. All right, so this is simply valid order block. So now you have to identify your high probability order block. All right, between the decisional order block and the extreme order block, the extreme order block is always high probability compared to the decisional order block. Why? Because the market, there's another order block right below this decisional order block. So the market may push down to swipe the liquidity of this decisional order block, mitigate our extreme order block before pushing higher. All right. So here our extreme order block is always high probability compared to this one. And furthermore, if the market failed this extreme order block, then this will be a change of character. So the market will need a high liquidity to break this last lower high here, higher low, I mean, before changing character right here. So that means the market will probably make a reaction on this extreme order block here. All right, so that's why our extreme order block is always high probability compared to our decisional order block. Okay, so let me make a quick recap about how to identify your valid order block. So just take a look at this small diagram here. These are the simple conditions to verify if your order block is a valid one. So when the market come to mitigate your extreme or decisional order block, you also have to identify if this order block is a valid one. So the first condition is that this candle here, that's supposed to be your order block, has to take out the previous candle's low. Okay, in this case we are in a bullish trend, so it has to take out the previous candle's low, which is here. All right, okay, no matter it is if it is a candle closure or just a liquidity sweep, it is always valid. All right, okay, and after that the next condition is that the next candle has to close above this candle here that has grabbed the liquidity of the previous candle. Okay, this way you have a proper imbalance here. All right, so when the market will come down here and mitigate, then we can definitely take a buy based on this order block here. This order block has a proper imbalance. This one is imbalance here. It has taken out the liquidity of the previous candle here. Okay, so this is the condition to verify if an order block is valid or not. So after you have identified that your order block is a valid one, you have now to identify if this order block is high probability. All right. So in this case here, I will show you another diagram in which you can easily identify a high probability order block. All right. So let me show you this diagram down here. So here we are. All right. So you see on the left here, the main thing you have to look for is liquidity. If there is a liquidity beside this order block or not, or if this order block has already taken out this liquidity or not. All right, so if you have an order block like this one here, this is a valid order block, but you see that on the left side here, in this case we are in a bearish market. All right, so we see that on the left side here you have the liquidity that's resting right here. That means what? When the market will push high like this, and mitigate this order block, there are highly chances that the market push a little bit high to take out this liquidity before dropping. Okay, so if you are placing your trade here, if you have placed your trade here and your stop loss just above this structure here, then the market will probably take out your liquidity before dropping. All right, so you have to be careful with this structure here. Same thing here. This one here is a trend line, and here this is equal highs. Okay, this is like a triple top here. Okay, and down here we have a trend line liquidity. So if this order block is down below here and there's liquidity high above here, there's chance that the market will take out this will push higher to take out this liquidity before dropping like this and take out your stop loss here. All right, so this is not a high probability order block. All right, the high probability order block is here. In this case here, you see that this order block has pushed a little bit higher to clear all this liquidity here. It is the same thing here, but the only difference is that this order block has pushed higher to clear this liquidity before dropping. All right. So after dropping, when the market will push higher, the probability that the market break this order block here are very low. Why? Because the market has already grabbed liquidity here, and when the market grabs liquidity, the market always make an impulsive move in the opposite direction. All right, because the market has collected all this liquidity here to fuel this move here. All right, so after fueling this move, the market will drop really sharply here and struggle to push up, to push back up. Why? Because the sell momentum is very strong here, because the market has cleared this liquidity here. So when the market will come to mitigate this order block again, there are highly chances that the market will make a rejection here. All right, so this one here is definitely a high probability order block. Same thing down here. If there is a trend line liquidity here and the market push high to take out this trend line liquidity, then the market will make an impulsive move to the downside. And then when the market will push high like this one, the market will just mitigate this order block and push downside. All right, it is simple as this one. All right, so the only exception in this trend line liquidity is that if the order block is high above here, your valid order block is here. Okay, if your valid order block is high above here, then that means this is also a high probability order block. Why? Because the market will grab all, we collect all this liquidity here before mitigating your extreme order block here. So there is no reason for the market to push high to take out your liquidity before dropping, because the market has already collected this trendline liquidity here. All right. So this is the only difference here. If this order block is down here, then this one is definitely not a high probability order block, right? But if it's high above here, then this one is high probability. Okay. And in this case here, there's another example. If the order block is behind here like this one, okay, so this one also is a high probability order block. Why? Because there is liquidity just resting just below it. So the market will sweep this liquidity before mitigating your actual order block, which is high above here. Then this one also will be your valid order block. All right. So this is the difference. This is how you can spot your high probability order block. You have to practice, you have to back test, and then you will identify them by yourself and very easily. All right. So this is the first criteria you need to take into account to spot your high probability order block. And the other trick that I can give you to spot a high probability order block is to pay attention to your session and the hours that you're trading in. All right. For example, here we are in US dollar and CAD. All right. US dollar CAD. So both are based in New York session. All right. So when the order block like this one here is created, for example, in an Asian session, that means it is really low probability order block. Why? Because both of USD and Canadian dollar are not on the market when this order block is created. All right, so when the market will come back to mitigate this order block here, there are highly chances that the market will break it. Why? Because it is created in an order session, right, than the session that these two currencies belongs to. All right, and the same thing applies for other pairs like OGPY, or the currencies that are based in Tokyo session, for example. Let me add this one. For example, in OGPY. All right. So if you are trading OGPY, the Australian dollar is based in Tokyo session, and the Japanese yen is also based in Tokyo session. So when an order block is created in London session, for example, this one will be a low probability order block for OGPY. Why? Because it is outside the section. If this order block is created in Asian session, then it is really high probability. And and most importantly, if the market come back to mitigate this order block exactly in the next Asian session, then this one is really high probability. The market will definitely make a reaction. Why? It is because the same banks that have created this order block in the Asian session has come back at the same time to mitigate this order block. Then there are highly chances that the market will make reaction from this order block. All right, so this is another small trick that you can use to identify your high probability order block. The first thing is to check for liquidity. If your order block is there is no liquidity resting just below or above this order block. All right, and the second one is to check also the timing. If the market has created the order block in the good session, in the right session. If you're trading Euro USD, for example, your high probability order block should be created in London session and New York session. Any order block created outside this session means it is a low probability. Sometimes the market will also react, will also respect these order blocks, but this one is just like gambling. You just have to have a clear plan and stick to that plan. All right. So these are the two ways that you can use to identify your high probability order blocks. All right, so this is just a diagram for explanation, and then now let's move to our real chart so that I can give you real examples. All right, so here we are in this real chart here, and you see here, if you have not yet watched my video on how to make your proper structure mapping, I'll leave a link down in the comment section. Then you can watch this video on how you can make your structure mapping. So as for now, this video is about how to identify your high probability order block. So I'll just make this structure mapping, and then we'll dive right into how to identify our high probability order blocks. All right. So this one here is our breakup structure, because the market has taken out this liquidity, this previous inducement here. All right, so I've jumped forward. I have just skipped this structure mapping part. I'll leave you the link in the description below for if you want to know how to make a proper structure mapping. Okay, so this one here is our latest change of character here. That means this is the beginning of this bearish trend here. The market was bullish at this point here, okay, making higher highs and higher lows, and then the market has shifted structure here from bullish to bearish now. So now we have to identify to look for sell opportunities. All right, so you see that the market has pushed downside here, okay, and take out this inducement here. This one is an inducement. This is our inducement, and this one here is our breakup structure, right? Do you agree with me? And high above here, this one is our valid order block, and the market has mitigated and dropped downside. All right, no, this is completely wrong. Why? Because first of all, this one here is not a valid inducement. You see that our lowest point is right here, okay, and the inducement should always be on the left side of the lowest point or the highest point, depending on the structure of the market. In this case here, we are in a bearish trend, so you have to identify the lowest point and then look for pullbacks on the left side on this lowest point. But you see here that this pullback here is on the right side, so this one here is not a valid inducement. This is the first mistake. And the second mistake, this one here is not your valid order block. Why? Because this candle that I've marked has not take out the liquidity of the previous candle. Okay, so this one here is not your valid order block here. As this one is not a valid inducement, then this one here will not be your valid breakup structure either. All right, so your valid inducement is high above here. This one here is your valid inducement. Why? Because this pullback has taken out the liquidity, the previous candle high, and it is on the left side on this lowest point here. So if the market push higher to take out this inducement like this, then you can take a trade based on the mitigation of this extreme order block here. All right, but the market didn't push high to take out this inducement. Then this leg here is like a single move leg here. Okay, this is like an internal structure, something like this. All right. So let's move on and see what the market have done later. So we see here that the market has created another structure here. Okay. So here we have our first valid inducement here. Why? Because the market, okay, this is our inducement here. So if the market push higher to take out this inducement, then this will be our valid pullback. All right, but you see here that the market has shifted the structure, has shifted the last lowest point, which was transferred from here to this new one here. So our inducement is transferred to this new pullback here, to this new and fresh pullback here. So let's see what will the market do. All right, you see here that this inducement was taken. This inducement was cleared like this one here. And where's our first valid order block? This one here. Okay, we're gonna check if this one is a valid order block or not. This one here is our valid order block. Why? Because it has taken out this previous candle's high, which is here. Okay, and next thing, the next candle has closed completely below here, so creating a proper imbalance here. So this one here is our valid decisional order block. Okay, but as you can see here, this one is valid order block, but it's not high probability. Why? Because there is trendline liquidity here. Okay, so this one here is our trendline liquidity, as I showed you in the diagram previously. So when the market will push high here, there's highly chances that the market push higher to swipe this trendline liquidity before dropping. All right. So, and this is exactly the market has done here. The market has pushed a little bit high to swipe this trendline liquidity. And now the market is about to create a single candle order block. In this video, I'll not cover the lower time frame entry because this one is not for entry models. Okay, we will only stay in higher time frame. So we'll only use single candle order block confirmation in higher time frame to take trade here. Okay, and just for educational purpose. All right. So this one here, the market has grabbed this liquidity, has swiped this liquidity, the liquidity of this decisional order block plus the liquidity of this trendline liquidity here. That means this setup here is really high probability after swiping this liquidity here. If the market creates a single candle order block here, then we can definitely take a sell based on this structure here. All right. So let's see what will the market do next. Okay, you see here that we have a valid single candle order block here. So first of all, this one here is our first single candle order block, but the next candle has not closed below it. All right, the next candle has just swiped the low of this candle here. So our single candle order block is transferred to this new candle here, and you see that the next candle has again swiped this previous candle's high here. So our single candle is again transferred to this new one here. All right, so this is our actual single candle order block. All right. So the first single candle order block was here, but as the next candle has just swapped the liquidity, the high and the lows of each other, that means our single candle order block is transferred to the next, which is again transferred to the next one until the next candle break and close completely below this candle here. All right. So this one here is our single candle order block. So if the market push high to mitigate this one, then we can definitely take a sell based on this one here, on this single candle order block. If you don't know how to take a trade based on single candle order block, I've already made a video about it. Just check my YouTube channel and you will watch a powerful video that will help you to understand how to take trade based on single candle order block. So here, um, we'll pen our sell limit here and wait for the market to come back to mitigate this single candle order block, and our target will be down below here. All right, and there is another thing that you have to understand is how to place your target. Most of SMC traders place their take profit at the next break of structure, but you have to know that the market doesn't absolutely care about your next break of structure. What the market cares about is your liquidity. The market is looking for liquidity. Okay, so after you place your, for example, you take a sell here, you have to look for sell side liquidity, which is down here. Okay, here I've placed my take profit at the break at the next break of structure because there is a liquidity here. There's a trendline liquidity here that the market will possibly drop to clear. Okay, so that's why I have placed my take profit here. Okay, so the thing that you have to keep in mind when you're placing your take profit is to identify your target liquidity, not the next break of structure. All right, so let's see if the market will push back to mitigate our single candle order block, and the market did come back to mitigate our single candle order block here. And then let's wait and see if the market will. Okay, the market has broken this structure here and take triggered our take profit here. Okay, so this one here is our high probability order block. In fact, this one was just a simple a valid order block. This was not necessarily a high probability. Why? Because there was a liquidity, a trend line liquidity below here. So you just have to keep in mind that when there is a liquidity above, resting above a valid order block, there are highly chances that the market push higher to sweep this liquidity before dropping. Okay, so you have to keep in mind. And when the market will take out your stop loss, you can still catch another trade based on the creation of this next single candle order block. And it is exactly what we have done here, and we have caught this move here. All right, and this sharp move downside here was caused by certainly a high impact news. All right, so this is the first case here of identify your high probability order block. Okay, so in this leg here, anything that is happening between this high and low, the high and the low of this candle here is an internal structure. All right, this is an internal structure. Okay, because this is a huge candle here, so we have to wait for the market to either take out the low of this candle here and create a new structure, a new inducement here. Then we can wait for the market to push higher to take it and mitigate order block, then we can sell again, or wait for the market to push higher and take out this inducement above here and mitigate maybe an order block above here. Then we can also take a sell based on this order block. All right, so let's move forward and see what will the market do. Okay, you see here that the market has pushed higher and take the market has cleared our inducement, which is here. Okay, so this is our inducement, and there is another possibility to take a trade here again. So you see here that after clearing this inducement here, there's no valid order block here. You see here, this one here is not a valid order block. Why? Because this red candle here has not taken out the liquidity of the previous candle high here. All right, and there is no other valid order block here. High above here, this is our last lower high here, and if the market push high to grab it or to break and close above it, then this will be our change of character. So this is like a liquidity zone, because most of traders will be placing their stop loss just above the latest structure here. Okay, and we have another trend line liquidity, which is here, which is down here. So if the market sweep this liquidity, then we can definitely take a sell based on this liquidity sweep. And you see that the market has swiped this liquidity here. Take a look at this structure here. The market has cleared this structure here. This is like a trap, because some traders that don't identify the proper order block will think that this one here is your valid order block. All right, we'll mark this one here as a valid order block, and will be placing their stop loss just above this structure here, so making it a high probability setup here. Why? Because there is high liquidity above here. So if the market sweep this liquidity, then you can definitely take a sell based on single candle order block. As I told you, we'll not cover entry parts. That's why I'm just using single candle order block confirmation for our entries. So let me use bar replay to come back a little bit so that you guys can see clearly how we can take your trade based on this single candle order block. So first of all, the market has swept this liquidity of this fake order block here. All right, so after sweeping this liquidity, you have to wait for the next candle to completely close below this one. So after closing below this candle here, then all we need is to wait for the market to push higher again to mitigate our single candle order block. Then we can definitely take a sell on this single candle order block here. Okay, and let's pen our sell limit, which is here. This is our sell limit, and where will be your target? My target will be down here. This is my first take profit, and my second take profit will be here on this valid order block. On this order block, I mean. All right, this is like an internal structure, but it is an order block, right? So the market may make a reaction here. So that's why I'm placing my second take profit here, and I'm placing the other one here. Why? Because this one here is your trend line. So it is like a liquidity zone that the market will possibly grab. So after the market grab liquidity, it always make a small reaction to the opposite direction before continuing its way. So let's wait and see what the market will do. Okay, you see that the market has already mitigated our single candle order block, which is here, and this one is our first take profit. And let's see what the market will do. Okay, you see that as I told you, the market has cleared this trend line liquidity. You see, the market has cleared this trend line liquidity and make a small reaction to the upside. So at this point, most of the traders will switch their stop loss to break even. So when the market will push high here, the market will clear their break even here. But if you have placed your take profit here, as I told you, based on trend line liquidity or target liquidity, then the market would have hit your take profit one before hitting your break even here. All right. So let's wait and see if the market will come down and completely break this structure. Okay, here we are again. The market has pushed downside and take out our second take profit, which is here. All right. But before that, the market has pushed. This one was caused by high impact news. And you see that the market has pushed higher to almost take out all the break evens here before dropping. And the market has also collected the liquidity of um, support and resistance trader. Okay. So this area here is like your support and resistance, and many traders, this one is the first time the market has tested this resistance area, the second time, and the third time most of support and resistance traders will place their trade here and their stop loss just above here. So you see that the market push higher to collect all this liquidity here and take out the break even of the traders that have taken sell based on this single candle order block before dropping here. All right, so this is part of the game. You have just to accept the outcome and move on and wait for the next opportunity. All right, so let's move on and see what will the market do again. Okay, you see here that the market has dropped finally and broken this structure here. Okay, so this is the next break of structure here. At this time, you have now to identify again your next break, your next inducement, which is here. This is my inducement, and where is my decisional order block? This one here is my decisional order block. But you see here that there is a trendline liquidity just above here. Okay, so this one here is not a high probability order block. Why? Because there is like a trendline liquidity just above here. Okay, okay, and our extreme order block is this hidden POI, which is here. This huge wick here is our valid extreme order block. Okay, but you see that this one is already mitigated here. Okay, so we cannot use it anymore. It doesn't have a proper imbalance here. And this candle as this wick here has already cleared liquidity. So this one, if it was not mitigated by this move here, this would have been our high probability hidden POI. Why? Because this hidden POI has already collected all the liquidity behind here. So there's no liquidity resting above it. So this one here will be our high probability order block, which is here. But this move has already mitigated this one. So our extreme order block is transferred from this huge shadow here to this structure here, to this new order block, which is here. So this one here is our new valid order block here. Okay, so this one is also a high probability. Why? Because it is a extreme order block and there is no valid order block above it. All right, this shadow here has already collected all the liquidity behind here, so there is no liquidity resting above it. And most importantly, there is like a trend line liquidity down below here. Okay, so this one here is your trend line liquidity down below here. So this is a high probability order block, which is here. The market will probably push high to collect all this liquidity here, mitigate our extreme order block, and then probably make a reaction to the downside. All right, so let's wait and see what will the market do. Okay, you see that the market has almost mitigated. The market has mitigated our extreme order block, which is here. So this is our stop loss, which is here, and the market has exactly mitigated our extreme order block right here after taking out this liquidity here. Okay, so every time there is liquidity just below the order block, then this is good for sell. All right, the order block that is high above here is your high probability order block. But if there is liquidity high above this structure, that means this order block is not high probability because the market will push high to clear this liquidity before dropping. All right, so you see here that the market has react exactly on this order block here. Okay, and let's see. Okay, you see that the market has already almost hit our break even, our take profit here, but the market didn't touch it and move it and is making a small reaction to the upside. At this point here, I would have already closed my position here when the market comes really close to my take profit like this one here. Okay, so let's move forward and see if the market will give us any other structure here. Okay, you see here that the market, after a long-term consolidation here, the market was moving sideways. You see that the market has pushed higher without actually breaking our structure down below here. So this one here is not yet a valid break of structures. That means the trend is still bearish, and here this one will not be your valid change of character. Why? Because the market has not yet confirmed the break of structure below here. Okay, so this one here will be just your, okay, let me get rid of this one. Okay, so this one here is still an internal structure. Why? Because our last lower high is high above here. So the market need to push high and break and close above this structure to be a valid change of character. Okay, so in this case here, the market is still bearish, and we can still take sells if you have any confirmation or any configuration. All right, so you see here that there's another trendline liquidity which is here. So this is our trendline liquidity, and you see that the market has pushed higher to take out, to collect all this trendline liquidity which is here. Okay, as the market is still bearish and there is no valid order block high above here, then we can still take a sell based on this liquidity here. Okay, as I told you, a high probability is a probability that has liquidity, has already collected liquidity, and you should always be targeting the next liquidity that will be your target liquidity. All right, and you see here that after clearing this liquidity, this one is our single candle order block. Why? Because the next candle has completely closed below it, creating a valid imbalance here. So this is your valid single candle order block here. Once again, we are not going to cover our lower time frame confirmations. We are only going to use high time frame single candle order block for entry confirmation. And this one here is like this. And my first take profit will be here because this one is like an order block, also an order block here that the market may react on. All right, but we can also target the next break of structure. Why? Because we have this target liquidity which is here. All right, so this is our target liquidity, and then your final take profit should be around here, because if the market push downside and sweep this lower low here, then the market will maybe make a reaction to the upside. All right, so let's see if the market will. Yes, the market has triggered our sell here, and let's wait and see if the market will give us take profit or reverse completely. All right, you see that the market has already pushed higher to invalidate our structure here, but the market was almost about to hit our take profit, which is here. All right, so at this point here, we would have already switched our stop loss to break even here. All right, and now the market has pushed higher and is on its way to completely change character around here. Okay, so this is how you can identify your high probability setups and your high probability order blocks. All right, we can keep moving forward, and it will be the same principle here, the same configuration. All right, so the first thing, let me make a quick recapitulation. All right, so let me make a quick recapitulation here. So the first thing you need to identify is that your order block has already cleared every liquidity around it. All right, so that then when the market will come back to mitigate it, the market will not push higher to clear this liquidity before dropping and take out your stop loss before dropping. All right, so this is how you can identify your high probability order block here. So if there is liquidity resting above this order block, then that means this one here is your low probability. The market will probably push higher to sweep this liquidity before dropping. All right, and there's another configuration is when there's liquidity just below this order block. The market swipes this liquidity before mitigating your order block, then this order block is also a high probability order block. You also have to pay attention to the timing and the session, okay, depending on the pair that you're trading. All right, so if you're trading like USD CAD, that means you have to pay more attention to order blocks created in New York session. If the order block is created in Asian session, then it means it is really low probability. The market will probably break it. All right, so this is how you can identify your higher probability POIs. This is it for this video. Thank you for watching it till the end. Don't forget to subscribe, and the next video will be about common mistakes that SMC traders make before we going to cover the entry modules. So stay tuned and see you next time.